Hi, I'm Dan Rosen. I'm chair of the Alliance of Angels. For those that don't know, the Alliance of Angels is the largest angel group in the Pacific Northwest. We have 140 active members. We've been around for 24 years now. During that period of time, have invested in about 250 startups and invested well over 125 million in those startups, an IRR of well in excess of 20%. We're proud of the fact that we not only put money into companies, but we really help them with getting people finding the right business plan and knowing how to scale. If you have any questions about the Alliance of Angels, please feel free to reach out to me, E-Jane, or Katie, and we'd be happy to get you more information. But that's not the purpose of the fireside chat today. The purpose is for me to introduce Meredith Powell, who is a venture partner at Voyager. Meredith is an award-winning serial entrepreneur, great at things like go-to-market, connected tech community advocate, and focuses primarily on new investments and business developments in the Canadian market for Voyager. She has done a number of startups, is a sought-after public speaker, and we are really, really pleased to have Meredith here with us today. Also pleased because Voyager has been a longtime sponsor and partner of the Alliance of Angels. So with that, let me turn it over to Meredith for some opening comments, and then we'll get into some Q&A. I'll moderate the first ones. Anybody with any questions, please put them in the chat box and I'll follow them as we go along. And we'll save lots of time at the end for people to ask Meredith questions directly. So Meredith, take it away. It's all yours.
Great. Well, hi, everyone. Thanks so much for having me this morning. I know sometimes these weeks can feel quite long, but I've been looking forward to chatting with all of you guys. Hopefully Friday we can get a little bit lively here, and just know that as mentioned in the preamble, you know, we have some things that we're going to discuss, but I'm very open to questions. If you have a burning question, please feel free to hop in, or as we suggested, throw it in the chat, and hopefully we can make this a little bit interactive too, because that's really the whole point, is to think about, what are the questions that are on your mind. I will try and be as candid as I can be. I did start my career as an entrepreneur myself, so I built a couple companies that were like D2C companies first, and then I got into like pure software. So I have some experience as a founder. I certainly took some hard knocks along the way. Really happy to be in a very founder-facing position now as a venture partner. So I assume most of you, I think, would be familiar with Voyager, but in case you're not, I'll just give you the quick kind of overview of what Voyager Capital is about. So Voyager is a 20-year-old fund based in Seattle, but as I mentioned earlier, with an office in Portland, and also myself right now doing the work from home office up in Vancouver. So we invest in Oregon, Washington, BC, and Alberta. It's a very Cascadia focused fund, and we're looking at B2B software companies specifically. We like early stage. So traditionally a Voyager round is like a Series A, maybe $1 to $4 million check. We recently started investing in seeds. So this is something that might be interesting for some of you to take a note of too, because this wouldn't be, if you looked us up on Crunchbase, you're not going to see a lot of seed deals, but we have started investing in earlier stage as well. So that's quite new and unique. We made a lot of investments during COVID in that space. So, we're looking at MarTech deals, a lot of SaaS models. We see healthcare, cybersecurity, big data. We're pretty broad if you look at our portfolio, but really always within that sort of B2B software sector. So that's just a little bit about us. I'm happy to dig in more, but that just gives you a little high level. And if you look at voyagercapital.com, you can learn a bit more about who we are and what we do. So maybe I'll leave it at that for now, and we can just jump right in.
So I'll kick it off, Meredith, by asking a few questions. Um, because you represent one of the more longstanding and larger VCs in the Seattle area, a lot of entrepreneurs always ask the question, how do angels and entrepreneurs select an appropriate VC for their deal? And do they need a warm introduction, or should they just send cold business plans over the transom?
Well, gosh, a warm introduction is always nice. You know, who wouldn't say yes to a warm intro? Um, you know, one of the lovely things about the Cascadia region, I would say, is certainly in Seattle, but actually throughout the Pacific Northwest, is we're a very tight ecosystem. So we really do work very closely together, you know, between the angel community and sort of more institutional VC where we land, also like later, like growth stage funds, and even, you know, through private equity. So I'd say that's one of the really, you know, one of the really valuable things about being based here is that you can leverage that network and ask for those warm intros. That being said, you know, there was an interesting article recently on TechCrunch. I was just reading up a cool company out of the Valley that tweeted a couple of VCs, and lo and behold, they managed to close their round, you know, just starting it off with a tweet. Two VCs who ended up jumping in, and it was a small, just a $2 million round. They got $1 million from each. So it does happen. It absolutely is an option to go for a cold LinkedIn in mail. You know, don't be afraid. I think, you know, all leads are good leads. Probably the biggest trick there is to qualify your leads. So I do, for example, I do get a lot of in-mails from companies that are outside of our region, you know, or outside of our scope, like their consumer deals. That's a bit challenging because not only does it mean to me that someone hasn't done their research to take a look at the kind of deal that would be a fit for us, but actually it's taking time out of their schedule as well to be following up or checking in with investors who actually aren't a match for their company. So that's sort of probably my one like warning on the cold reach out. I would say do it, but just be cautious. You know, do your research first and know who you're looking at. That can be Crunchbase or PitchBook. You know, there's lots of ways that you can find out intel on who's the right fit for you.
And if when entrepreneurs and sometimes angels go to VCs, they often wonder what happens. Can you go through the process of the life cycle of a deal for Voyager and how you make decisions and how long things what should be the expectation of time for entrepreneurs and angels?
I used to wonder the very same thing. You know, I'd take a meeting and then I would leave and think, what's happening behind, it's like behind the velvet curtain, right? Like what kind of conversations, did they like my pitch? They didn't like my pitch. When should I hear from them? So I would say, you know, it's variable. So for example, right now, you know, I've been looking at a deal with a co-lead. They're a $30 million fund. And there's really only one GP who's the decision maker on the deal on their side. Whereas we are, you know, $100 million fund, and that's only in fund 5. You know, we're a 20-year-old fund with 5 funds. We have multiple MDs. We have 4 MDs, multiple partners. So our process is very different. And we aim to be as transparent as we can be with founders around our process. So typically, you know, anyone who, certainly at the institutional VC stage, anyone who's done a few deals, they should be able to articulate for you at least an approximation of what their timeline might be, and certainly what their process would be. In our case, for example, you know, we go to vote and we have, you know, lengthy discussions internally, and we circulate deal memos, and we do a lot of due diligence before we would get to the place of a term sheet. In some cases, you have funds who actually put a term sheet down first, and then they put you know, a long, maybe 60 days on the term sheet, and they do their DD during that 60 days. Those are 2 very different processes. And ideally, as a founder, you should feel comfortable being able to ask after that process, you know, as part of your back and forth, to say, look, you know, can you tell me a little bit more about how you assess deals, you know, what your timelines look like? And, they should be able to walk you through that. It's a little bit different with angels as well. When you think of those earlier rounds, many angels, they're investing their own money. It's a high net worth individual, and they can almost do, they always say like a paper napkin, okay, here's 100K or 50K. And sometimes that happens over coffee in a conversation. So that's a completely different process. That said, again, I've met angels who do very deep DD. And they can tell you up front, like, look, I'm going to do probably 60 to 90 days. I want to talk to customers. And they're very involved in assessing their deals. So again, I would just say there's no one way for angels or for VCs. But ideally, if you make it part of the conversation, you're not sort of caught out, I suppose, not understanding what the expectations are or the process. And any investor should be able to articulate for you, what that looks like for them. Is that helpful?
That was very helpful, but let me make an editorial comment, if I may, that the Alliance of Angels does not do that. We don't have an entrepreneur and sit them in a room and write a term sheet and give them a check. So your expectation, if you come to the Alliance of Angels, is we behave something more like a VC than like somebody who you would sit down with in Silicon Valley and draw a plan on a napkin and get a check on the spot.
Yeah, and that's an interesting differentiation, right? That you're also operating with, you have 140 member, angels or more than that. So you're operating differently, but I would be confident that should someone come in and say, gosh, I'd love to know more about Alliance of Angels, what's the process? You could outline for them at least a ballpark of, what the process would look like. And these poor founders don't have to be wondering like, gosh, what the heck, I haven't heard back, or, what's going on. We can all share a little bit about how our process works.
Yeah, in our case, we ask that from presentation to decision be 6 weeks or less. So we don't like to let things drag on. And that's to some measure because unlike a VC, we have a monthly cycle where every month we have more companies pitching. And if you wait more than a month to begin diligence, you get another group of companies already in. So almost by definition, we have to go on the kind of process we outlined. Is it reasonable for an entrepreneur? I mean, would you recommend that they make repeated calls after their presentation to find out if they're in the process and what's going on, or how would you recommend that work?
Yeah, it's so subjective. Like I like a follow-up. Like to me, that's great. There are also a lot of deals that variously get tracked, right? So sometimes, I might meet a founder where they're not actively fundraising, so it's not a fit in the moment for us, but follow-up is actually key in ensuring that we stay in touch. So whether that's a quarterly email, or sometimes we do a quarterly catch-up call, so that when the moment comes that they are raising, perhaps they were doing a pre-seed that's too early for us, or they're sort of building relationships, there's a big piece of that where that's so important. And for me to keep up with the thousands of founders that we meet is next to impossible. So I really rely on that follow-up from founders to keep me in the loop on what's going on, or ping me if there's sort of an event of some kind. Maybe they sign a very significant enterprise deal that might be sort of an inflection point they would want to highlight to me, aside from waiting for a quarterly update. Now, if we've had a company in to present at Voyager, generally speaking, that means we're quite far down the line in terms of getting to know a founder and getting to know a company. So it would be appropriate for that founder to follow up with us. Probably you want to exercise some caution on the multi follow-up, but maybe don't hit not Twitter and LinkedIn and an email, but certainly like email follow-ups, and particularly with unique questions. If something came up in a presentation, for example, an introduction that might be valuable, a follow-up with a point is great. Or a follow-up, hey, we just signed a new customer. Anything that can be a little bit of news that helps prod us along is extra valuable as well.
So when an entrepreneur hears that, gee, we really like your deal, stay in touch, but not, we're going to write a term sheet. Can you translate that for the audience?
That's such a tough one, right? Because you're going to hear that more often. Like we might look at 100 deals to do one deal. So I know for founders, many founders take many meetings and get many no's. And then you're always trying to assess, like, what does that no actually mean? It's a bit of a longer answer, but I would say it can mean a few different things. So if you're pitching, for example, a VC that typically invests in Series A at a certain size, a certain model, a certain valuation, and you fit that mold, and you're getting, we really like you, however, stay in touch, not at this time. Like that's a different kind of no. Like to me, that's a pass. That's a hard pass, and I would put it, hopefully you were tracking clearly in Excel or HubSpot or whatever you're using to track your fundraising process. I would put that on a cold, right? That's like an ice lead, because that was someone who was in your sweet spot, who is probably generously, kindly trying to spare a hard no and say, look, we think you're really interesting, but ... And you really want to pay attention to the but. That said, say in my case, I frequently see deals that could be in our wheelhouse, but for some reason, for example, being too early, I would say, really interested, we'd love to stay in touch. And I would try and qualify that by saying, look, let us know when you hit XYZ sort of mark, because that would be the right fit for us. Or I might give someone a little bit more of a reason, but that's really important to think about where the no is coming from. And often it is just a pass. I hate to say it because I know we always want to stay hopeful, but generally if someone's really excited about your deal and you're in the wheelhouse, but for some reason they're passing, typically I would put that in the ice column. You also hear a lot of lead, like this is something that we hear often where someone will say, well, I would be interested, but you need to go secure a lead. And when you do that, come back and let me know. And I might put in some, I might follow. So one thing you can do that's really helpful is do your research beforehand, who leads and who doesn't. So Voyager Capital, for example, we often lead and syndicate a Series A. We are very clear on that. You can see it in our portfolio. Again, you can, even if you don't have a PitchBook license, you can go into Crunchbase, you can see the lead investors. So if you know that in advance, that's very helpful as you qualify who you're speaking to. And again, for someone to say, well, go find some other investors and come back, and you think, well, that's odd because it looks like they frequently lead rounds. Probably not the best indicator, but there are some VCs who really just, they don't lead, and they're not looking to do that. So they are being genuine and saying, come back to us.
Yeah, it's really funny to hear you say that, because a lot of times when I talk to entrepreneurs, they'll spend so much time doing market research, so much time developing a product, and they spend absolutely no time researching their fundraising criteria. And it's so helpful if you're talking to somebody, if you know what they'll do and won't do. It saves you
Absolutely.
so much time.
So much time. It's so crucial when you look at companies that close rounds in 2 weeks or 3 weeks and you think, how did that happen? Often they were very strategic. They did the front work. They may have opened it and closed it that quickly, but I bet you they probably did a long tail before they opened that round in terms of research, and then certainly tracking all of your data as well. There are, there can be terms, for example, you might go out in the market with some terms that initially get no's. And perhaps within 3 months of meeting with VCs, you go back, you say, you know what, that really wasn't, I need to rethink how I'm structuring this round. And you might actually want to go back through those notes and go back to some of those investors and say, I've changed, fill in the blank. I thought I was raising 2 million, now I'm raising 5. I thought I was looking for this valuation. I've really thought about that again. I think differently. All those, having those clear notes as well of your process allows you to go back to those maybe warm leads or even possibly some no's and revisit them and sometimes reopen.
That's great advice. God, that opens up so many different questions. Let's talk about valuation. Is it an art or a science?
Oh, it's both. It's both, I would say. Valuation, it's a tough one, right? Because it can be a deal killer if you really can't get to the right place. I think on the topic of going in prepared, here we are talking about really thinking as strategically about your investment process as you would with your product, as you would with building your team, as you would certainly with reaching out to customers. I think valuation is another place too, where there are resources that you can use so that as an entrepreneur, and actually as an angel as well, you go into a conversation with a bit of data, right? That's always helpful because there's kind of the subjective piece of evaluation. And this might mean, say during COVID, certain areas in tech exploded, right? We saw e-com go wild. We saw all this proliferation of video, personalization. People were in hot spaces, and all of a sudden, all these eyes were on their businesses. Meanwhile, in say the travel industry, or we saw other people really struggling, or in events, and perhaps the valuations they might have expected due to circumstances outside of their control, but very relevant for investors, they found themselves in a difficult spot where having those conversations, were tougher. So sometimes there are market indicators that you need to be thinking about. But certainly, again, if you can get access to PitchBook, this is probably the best place to start for vals. And I will often do this for a company they're trying to figure out, look at their comparables, but also look at their competitors. And they'll try and take a look at, well, what kind of valuations have they raised at, or maybe even look at some exits and look at what those exit multiples were. I can generally pull that for them. And I'm always happy to pull some numbers and pull some reports. It helps me certainly to have that data, but also for founders, for them to have that data is really important going in, so that you kind of, to the point of art and science, you've got the science, you've got some data you can speak to. And then you also can think about sort of general, market movement. And then, on the other side is too the sort of more subjective conversations about how long you've been fundraising and what's the appetite of the VC. And certainly you see higher valuations in the Valley than you see in some other areas. Some investors are so value add that you might say, gosh, I'm so happy to have an open discussion about valuation because this is an investor who brings so much to the table. Maybe they're bringing customer introductions. They're going to be hands-on, perhaps serve on your board. Those are the kind of pieces of the puzzle that you want to put together as you think about that, especially at the early stage, where usually dilution, sometimes you don't want to get too caught up on that, I would say, but it's an important conversation, of course.
And you mentioned team, of course, and we all look at teams. By the way, I should mention on stage of deal, Voyager is always very kind. Almost every month, you're sending the Alliance of Angels a deal that you really like, but it's just too early for you. So I should thank you for that. So thank you very much. But having said that, team, do you think a team for a VC to consider it needs to be complete, or do you mind when a company comes in and you like the company and you like the model, but they have some significant gaps in the team? Will you look at those deals as well?
Yeah, and it's very different by stage. So if we're looking at a seed deal, I would say at Voyager, we have a really good roster of fabulous prior founders or just people in our network, and we will often, perhaps if someone says, look, I've got this farm, but I'm really looking for a fill in the blank, COO type co-founder. I've got a good VP product, but I really need a CTO at this next level. We will often dig into our Rolodex and see who might be a fit. So super happy to do that. And that we see that more at seed. By the time you're hitting a Series A, we would ideally like to see a fuller team. One of the other benefits of being in this region is we see a lot of really interesting, experienced founders who've come out of some of the bigger Amazon or Microsoft, or, this is a pretty common DNA. At some point, they hit on a problem, they have an interesting solution, and then they spin out to start something. They often bring a really good network with them. So we do frequently see kind of more complete teams, but that have come out of, other bigger organizations and sort of they're working on those problems together in a startup capacity. In Canada, I see more frequently individuals looking for strong co-founders or strong team. And that's just where, again, if it's the right fit, like we'll roll up our sleeves and help make introductions. But you know, team in general is incredibly important. So, you know, you wouldn't want to see a lot of gaps, I would say, at that sort of early stage. So maybe there's two strong co-founders, they're looking for a third, or someone's looking for really good VP sales. Also, board is typically less relevant. Like we often see seeds that don't have a formalized board yet. At the Series A level, that's when we really start talking about a board and, you know, do you have an independent and are there sort of VCs on the board, and making sure that they have the right support, that when the dollars do come in from those rounds, that they can really maximize and accelerate quickly.
Mm-hmm. My next question is sort of somewhat loaded. The Alliance of Angels was cited for the last couple of years as being the leading funder of women-led companies in the Pacific Northwest, something we're actually very proud of. And from a business sense, it makes a lot of sense because the data comes in that women-led companies tend to do better economically than the ones that are not led by women. Given your background, I assume you have a lot of women entrepreneurs coming to you for advice. Can you talk about that a little bit?
Well, first off, congratulations, because that is something you really want to fly that flag. Like, that's very important, super valuable, and particularly at the level where you're coming in, where some of those companies, if they don't find that early stage funding, like they may not exist down the road, right? And then a VC like Voyager, we never even get to look at them because they never even got to the point where they were raising that seed round or that Series A. I think it's a very well documented issue, certainly in tech, that we don't see enough diversity in the founders of companies. On the other side too, in terms of angel investors and certainly VC, I think it's like 13% of female partners in VC. It's abysmal. And we see the same thing on boards as well, where we typically see very homogenous looking boards. I'm very fortunate at Voyager in that we have a more diverse team. And in fact, one of the really appealing pieces to me of joining the team was that we have a fabulous, I mentioned earlier, we have a Portland office, we have a fabulous female partner working out of Portland. And, you know, and I say working out of Portland, but we're a small enough team that we all work on all the deals. So whether you're based in Seattle or you're coming from Portland or you're coming from Canada, I mean, we all work together. And that to me was very impactful to see that diversity sort of at the top level of VC. I think because of that, you're right, we do end up seeing different deals than some other VCs because we look a little bit different too as a VC. I think, you know, the last year, like there was a burning platform when Black Lives Matter really took off. All of a sudden, all of these organizations were popping up and saying, this is no longer a nice to have to think about DEI, right? This is like a must do burning platform, critical area that we all need to be looking at. So what we saw, which heartens me greatly, is we saw a ton of like new funds pop up that are, you know, BIPOC led and investing across impact, across, you know, B2B, B2C, you name it. That's really exciting. So I think for us, when we look at co-investors now, then we think, oh, there's this whole new world of interesting funds that have popped up all across North America that we can now work with. We also saw a huge shift in the kinds of companies in terms of startups that we're looking at. So like we invested in a really cool company out of Seattle called Syndicate, and it's an equity tech platform. So they knew that all of these companies all of a sudden were saying, okay, we need to be looking at diversity like yesterday. Like this is not, again, you know, nice to have conversation. We need to know the numbers. We need to be acting. We need to be speaking publicly about what our plans are. So Maria, you know, with Syndicate is being in the right place at the right time. We were very, very honored to get to invest in her first sort of larger round, and then actually just reinvested again to Bessemer led this most recent round. But they have done explosive business during this time period as everyone thinks about diversity. And I'm starting to see decks actually that quote their numbers, their diversity numbers, which I have never seen before. And I don't just mean like impact startups, all different kinds of startups. They're actually including slides where they say, by the way, we have, you know, whatever blend today, and maybe even setting goals for the company. And they're baking it into their culture and the core values of their company to be thinking about diversity. So that's totally new. I've never seen that before, and it gives me thrills.
That's wonderful. I'm going to take a few questions off the chat line. Dave Siegfried asked, how does Voyager differentiate between pre-seed and seed? Is it primarily the size of the round, the milestones reached? Where is the cutoff?
Yeah. So we try and avoid getting too caught up on nomenclature, because I'm sure this group has seen too that it used to be more delineated. Now sometimes we also see terms like seed 1, seed 2, seed 3, and then there's extensions and bridges that live in there too. So, you know, for us, a seed round, you know, it might be pre-revenue, or there might be like a little bit of early revenue. Generally speaking, there's at least a path to product market fit. Maybe not there yet, but we can clearly see that path. We can see sort of a clear path, clear kind of go-to-market path. Usually in a seed round, because we wouldn't lead a seed round as an institutional VC, we're typically seeing it would be like other angels, high net worths, maybe some family offices who are either already in that seed or looking at the seed, and we might contribute 100K or 150 or something into that seed round. And the seed round might be typically, again, it's a little hazy, but anywhere between sort of 500,000 to like 2 million, 2.5 million would probably be like a sweet spot. We are less concerned with ownership levels as well at a seed as we would be at a Series A, because the Series A, like I mentioned, might be a $1 to $4 million check. We would, you know, potentially lead and syndicate. So it's a different, maybe take a seat on the board. It's just a different kind of relationship than it would be at seed. What we're really looking for is to support, you know, top promising founders at that early stage, where then we can kind of leverage some of the secret sauce of what we do at Series A plus at that seed level and help get those companies further, faster, sort of on the right track. And ideally, you know, allows us to have sort of first eyes on the business, so that when that Series A comes around, we can really be a valuable part of that raise. But yeah, it is tricky, I know, because if you're thinking you're going out for a pre-seed or a seed, you know, you might find yourself caught between the two. But generally, I feel like once you're out in the market and you talk to some investors, they will also help shape for you with like where you're really landing. Sometimes people come to me at a pre-seed and actually they need to raise more money. They need to raise more like a true seed, or vice versa. They're thinking seed, but they end up landing more like in a pre-seed bucket.
Mm-hmm. Yeah, we see the same thing. We've often advised entrepreneurs that the amount that we'll invest, but the amount of money that we're investing isn't sufficient, and they need to go find a way to get more money. And it's tough when you're doing it for the first time.
Absolutely. Those kinds of candid conversations with people who've done it before, that's invaluable. And it actually goes back a little bit to your point about, you know, do you wait for the warm intro, or do you know, sometimes do some of your own digging? And, you know, some of your own digging can also just be really helpful when you get smart people who are willing to, you know, give you some time and offer some feedback from the market, because ultimately the market decides really, right, how much you're going to raise and what you call it. You can think one thing, but until you take it out and really get that feedback, it's hard to know.
Yeah. In fact, one of the things that I think angels around the world, not just in the United States, but everywhere, are proud of is the fact that we don't just invest money. That's the whole idea of being an angel. You're giving back and you invest into the community and you help entrepreneurs figure out the right way to do things so that they don't make mistakes that cost them down the road. We're pretty proud of that. And I see a lot of people on this call who spend a lot of their time doing that. So thank you, everybody who's on the call. The next question is from Canada, from Thouzel Lee. Do you syndicate, how, and as a leading investor only?
Yeah, so we think about syndication at that Series A point. Generally, at a seed, we wouldn't be looking to lead and syndicate around. Would we offer intros? Absolutely, of course, but it's a bit of a less formalized process. And in some cases, we might just be coming at the end. It might be that a round is essentially filled out and that we're sort of like a last check-in and, you know, filling out that round, and there's really no need for that kind of approach. Yeah, Series A, you know, and this is probably interesting for anybody too, if you haven't actually encountered like that kind of lead and syndication process before. Not only is it good to know beforehand who might lead and syndicate, but when you look at, for example, when you're doing your research, you can see like our number of exits, you can see our number of investments, you can see where we've led, and then also have a quick view of who we have co-invested with. So in some cases that might even be a co-lead, right? Where, call it a $10 million round, we contribute a few million, and there's a co-lead who also puts in a similar amount, where then essentially we are working together to help bring the rest of the round together. Now, of course, you're always doing that hand in hand with the founders, right? Your VCs aren't going rogue and magically pulling in who's going to be in the round, but we would look at your space. We would look at what kind of expertise, you know, that we have and what might be additionally helpful. Even regionally, we might look and say, well, would this be valuable to, you know, if you're a fintech, to have a co-investor out of, for example, New York or London or Toronto, perhaps, you know what I mean? So we'd have conversations about that and really work up a short list together with the founders and say, okay, here's who we know at Voyager. I'm very fortunate to have quite a few partners who have been at this for decades. So they have really deep knowledge, and they can make lots of intros. We would look at strategics, for example. Does this make sense for your particular business to have a Salesforce Ventures or something? And we'd probably have a discussion about that. You know, we'd also think about going down the path if, you know, you're looking at sort of M&A or, you know, IPO. Down the road, we might suggest, well, maybe we should be talking to Goldman Sachs. Like, so there are a lot of pieces to that. But it's definitely an art, and really helps the founders if you have a lead who's experienced with syndication, who can bring those people together. I mean, it's going to fast track your round significantly.
That's cool. I see Bill has just joined us, so that you better be careful what you say about him.
Oh, shoot.
Hey, I was going to follow up on that.
I just got off a call with investment bankers, so.
I wanted to point something out and be clear about it, because sometimes this is confusing. If you're going to syndicate, is it fair to assume that you expect the entrepreneur and their team to actually do all the work? You're not going to do all the work with the syndicate partner to get the deal done, correct?
Yeah, that's sort of what I'm saying too. It's not just a magically all of a sudden your VCs are, you know, going rogue and shopping your opportunity around and taking all the meetings and, oh, poof, your round is done. Not quite like that, but certainly, but we would work together, you know, saying, look, here are intros that we can make, here are people that we know that we worked with before that might be additive, you know, and then be able to work together on, you know, who feels like the right fit. And that's like a superpower in your back pocket, especially if you're, you know, a first-time founder too, right? And maybe don't have those connections.
Cool. Let me make an editorial comment here. Anybody who would like to ask their own questions, if you go, they moved it, but if you go to the reactions button at the bottom is something that says raise hand. You can raise your hand and I will call on you. Otherwise, you can continue to put them in chat and I'll continue to ask them on your behalf. So Calvin has asked, Calvin Cabanda, did I pronounce that right? I hope, Calvin. Does Voyager or the AOA want to see an MVP or traction for seed deals? And if so, what kind of traction metrics?
Sorry, so they're asking for an MVP, asking about an MVP and traction?
Or traction.
And or traction. Well, I mean, both would be great if that's relevant. Now, traction can come in a few different ways, right? So it's interesting that that the question was about traction, because sometimes people ask about revenue, right? And they go straight to a revenue threshold. All right, so if I'm raising a pre-seed, I'm here. If I raise a seed, I need this. We often hear, if you're thinking Series A, come to us when you have $1 million ARR. That's kind of a common one. But in reality, I would say there's a lot of gray area around that, because we might see, for example, a seed deal that has traction in terms of customers, right? They might be running unpaid pilots, or a 90-day free trial. There's different ways that you might build your company. Now, we are also looking B2B software. So again, I do think a lot about recurring revenue, but certainly if you're in the B2C space, it's very common for a business to have, hundreds of thousands of users, but not a lot of revenue. So traction, as you're looking at your business, you think, well, what does traction mean to you? You might have certain areas of the business where you don't have quote unquote like revenue, you might be pre-rev. And we would certainly be open to looking at a seed deal that was pre-revenue, but had some interesting traction. So that can even be sometimes like POCs. We see LOIs as well with like larger customers where you could show proof of a future engagement, but perhaps you haven't engaged yet. And sometimes actually at seed too, we see companies, they're actually raising money to be able to execute on some of those sort of promises, customer promises. That's not uncommon. I think on the MVP front, at seed, we'd want to see something, right? Pre-seed is a little bit different, because you might be going out early for like a really traditional sort of angel round or pre-seed, and perhaps you don't have a fully fleshed out MVP. But I think at seed, we certainly, most of the deals that would get down the path with us have something that they can show us.
And since you asked for the AOA as well, we're a lot broader in what we look at. We will look at pre-seed deals with an excellent team and a good plan. We also look at deals that are essentially Series B kind of deals that come in with quite high valuations, where we're topping off a round that somebody like Voyager may have led. So in our case, we run the gamut. But remember but I was going to make one nuanced comment to what Meredith said, is that your terms and valuation need to be moderated by where you are in your planning. If you are pre-MVP and pre-revenue and you're coming in with a 15 million pre-money valuation, you really need to seek advice from somebody and not do that. Unless there's something truly, like if you're Rich Barton coming in with a new deal, maybe. But if you're any normal kind of human being who hasn't created a ton of value in their life, all of your terms and expectations need to be moderated by where you are. So I have a very interesting message that actually was directed just to me from Michael Flynn in Southern Oregon. He said, Voyager sounds great. I especially like how hands-on Meredith seems to be. Please ask where they are in their current fund, time and money invested to date, and how many companies they have invested in, if they have a unicorn yet.
There's a lot of questions there. Yeah, so that actually brings up something really interesting that, again, I don't know is always on the checklist as founders think about, strategy and fundraising, which is, where is the fund? Like, we closed our fund 5 at the end of 2019, right? So, and generally speaking, this is pretty easy information to find. A quick search, most of us press release when you close. So you can find that pretty easily. And then also there's sort of the question of like dry powder, right? So how much have you invested out of a fund and how much do you have left? So you might, look at a fund and say, oh, this looks really interesting. However, I noticed, they're sort of at the tail end of their fund. That, I wouldn't say it's a go or no go, but like interesting information for you to have as you think about the first check-in, because we are talking about early investments. If someone's saying, well, gosh, we'd love to come in at a Series A and we follow on from there, do they actually have additional dollars to follow on from there, and how big is their overall fund size, right? Because a check from a $30 million fund is going to be significantly different from a $100 million fund, or, you know, the big multi-billion dollar funds that we see in the Valley. So that is an interesting question. So, you know, COVID for many of us meant that we did not deploy as much capital in 2020 as expected. We spend a lot of our time talking to, you know, friends in the space, not only in our region, but other regions, just checking in and saying, gosh, you know, how did you find 2020 was? And I think, you know, the general consensus is across the board that due to, in particular, the first many months of 2020, you know, we would be used to having a certain pace with making investments, and most of us were thrown quite off pace and spent most of our time instead focused on the portfolio. So everyone was re-looking at budgets and, you know, thinking about potential bridge rounds. In fact, we did some follow-on investments as well with current portfolio companies, which I think, you know, is pretty common, and really kind of batten down the hatches. And then once everything felt like it was moving again, you know, we did start cutting checks again. But the majority of our investments in 2020 were actually in seeds. So I had mentioned at the beginning of the call that this is fairly new for Voyager, that we started doing seed investments. So we got quite excited about looking at these sort of earlier stage deals, and we found some really fabulous deals early on. And now I would say for 2021, you know, we aim to be kind of back on pace again. But, you know, there's still a lot of unsureness about many things, and we'll have to kind of see how the market goes. But it feels like it's picked up, like we're seeing more deals, and I think we'll be cutting more checks as well.
Cool. So the next question came from Prince, who asked about the BIPOC investing. Just curious to know which companies Black owned actually got funding in the tech world. Do you have any insight into that?
In general, I mean, I don't have to say, I don't know the stats. I do look at some groups like Harlem Capital has been very proactive in sort of aiming to track. Like, I think one of the big issues that we all have agreed for a long time, and certainly it was the same with sort of gender, when you looked at gender in both in VC and in tech, is we just didn't have the data. So there's some great groups like All Raise, and even FFA in Seattle as well. Like, they started doing incredible reports, and All Raise partnered with PitchBook, and they said, well, now we have to start tracking this. And if you look at Crunchbase now, they added a new feature, and it's called I think it's called diversity investment. And it's actually reporting for the portfolios how many investments they make that are quote unquote diverse. Now, again, I'm not 100%. I saw it just pop up on Crunchbase recently, and I thought, oh, I wonder how they qualify that. Like, what? And that it would be an interesting question to think about that data. Harlem Capital, Backstage Capital is another one you've probably heard of, that like Arlen started shaking the tree actually a couple years ago, and raised a small fund, but has been a very strong voice across the ecosystem, but especially in North America, pushing companies to report and to have more transparency around diversity. So, I mean, those are a few. Plexo Capital is another really cool one. Low spun out of Google Ventures, started Plexo again a few years ago, and they have been like actively investing. They bring a ton of experience to the table. And I know at the same time have also been, you know, doing a lot of work in terms of reporting and tracking. But I don't know. Yeah, I wish I did know the latest numbers. It would be really interesting to see how 2020 landed right now that we're through the year. Like what difference, like, it's one thing to talk about these good, you know, this is great, but like how many companies actually got funded at what amount? But I don't know the numbers, unfortunately.
Yeah, it'd be nice to get some data on that. We often talk about the role of government in doing venture capital and angel investing. I think collecting that kind of data would be a wonderful role for government to sponsor.
Yeah, and, essential, really, right? Otherwise, we're just sort of speaking in a bubble here or there, but we're not actually working off the latest data, and that's so essential.
Yeah, it'd be nice to have it be data-driven rather than emotive.
Yeah.
So I promise I did not plant this question, but John Dex asked, how do venture firms interact with angel groups, and what role do a company's angel investors play in helping introduce and guide founders to VC for later rounds?
Well, do you want to take that one as well with me? I'm
Sure.
strong opinion on that one.
I'd be happy to. I wish I thought to plant that one, but I didn't. So I'll kick it off if you want me to, Meredith.
Sure.
So that's one of the things that we as angels do. Most angels have great relationships with the venture capitalists in their own communities and sometimes in other communities. And I think one of the more important things we do is tell you which VCs not to take your deal to. Because as Meredith said earlier, if you don't know what the VC invests in and you take them a deal that's out of their sweet spot completely, you've wasted your time and theirs, and you sort of look a little foolish. The other role I think we play, and I'm working with a company down here in San Diego at the moment, is I get quick no's. I'll send a plan to a VC I know, and they'll get back to me in 15 minutes saying, I'm sorry, but that's just not right for us, or we have a competing deal and this one's a no. And so rather than go into a process and spend the next 6 weeks with your hope up, you get a quick no if you bring in an angel who happens to know the VC. But I think we also lend a modicum of credibility to a deal, because when the Alliance of Angels has invested in a deal, it means we've done diligence and it says something. So it's, I mean, that's my perspective, but go ahead, Meredith.
I think you're being very humble. Yes, more than like a modicum. So interestingly, there's individual angels, right? Like I might just invest personally in something I think is interesting. But when you actually look at syndicates or orgs like AOA, you are doing a unique level of DD, and you're also seeing a significantly larger number of deals, right? I mean, it's rare that I ever send something over to your team that they say, oh, we've never heard of this before. There's usually some connection. They've seen the founder before, they've heard it before, something. So that, that goes a really long way. And then just having that experience as well, right? As an individual angel, I might see and look at, 50 deals, or I might see 50 deals, I might do 3 or something, so if you just think of the math of how many deals your team has access to, it has done before, and you learn every time, there's experience every time. But you did mention earlier how we do have a lot of back and forth. I mean, that's so valuable, and it really does go both ways. And I do make an effort, to your point of, coming back with a quick yes or no. If something is a fit, great, let's go for an intro. If something isn't, let's save you your time and put it back into your calendar, because you can use it for more valuable things. The other thing that's kind of interesting when you think about relationships between angels and VCs is, as an institutional VC, we have investors. So I know it's hard to imagine, we actually have to do the same thing you do. We go out, we give the Voyager pitch, and we find great groups, companies, but also individuals who believe in our vision and want to share in that as well. And probably no surprise, many of them are also angels. So we have, even within our own network, we have limited partners, right? LPs who are also doing deals. And sometimes we'll see something that we will send to them and say, gosh, this might be interesting for you. And they do the same thing in return. And that's not uncommon to see in funds like ours as well. So there's we have our little internal network too, where we're always sharing and trying to add value.
We have about 4 minutes left, according to my clock. Any closing comments you want to make, or any last minute questions from the audience that are burning? If so, unmute yourself and talk up. Otherwise, I'll turn it back to Meredith for any closing comments. I don't see any hands up, so go ahead, Meredith.
We have a shy group, but I haven't been in the chat, and I've been seeing the pings come through. So I would say, look, I'm really easy to find, right? Like whether it's on Twitter or LinkedIn. I mean, LinkedIn I find is the easiest because it's a nice way to stay attached. Certainly, please, anyone on the call, feel free to add me, ping me there. I'm happy to answer any further questions. I know sometimes too, these environments can be challenging because there's so many people, but you might have a burning question that you just want to ask one-on-one. We're very open doors. So that's what I'm here for. Otherwise, it's just an honor to spend some time with you all this morning and have a good chat.
Thank you so much. And let me close with this, particularly with, I think, at least 3 members of the Voyager team on the call. We really appreciate Voyager's support of the angel ecosystem in the Pacific Northwest. We typically focus on deals only in the Pacific Northwest, just as you do. And the cooperation, I remember when we started the Alliance of Angels, I sought advice from one of the longest running angel groups in the country, the Band of Angels out of San Francisco. And they told me that one of the things they do is they keep VCs at arm's length because they'll still steal their deals. And one of the things I love about Seattle is how collaborative and cooperative the investment community is. I can't remember a time when there was a deal in Seattle where angels started it, VCs came in and then kicked all the angels out of the deal. It just doesn't happen here. And I think that kind of collaboration and collaborative environment is one of the reasons why the Seattle ecosystem is so strong for both investors and for entrepreneurs. And so it is so wonderful to have Voyager be a part of it and to help us make the ecosystem even stronger. So with that, I hope everyone has a fabulous day and keep on keeping on and stay healthy, please.
Thanks, everyone.
Thanks.